The beautiful Caribbean region is exposed to extreme natural hazards. Now, growing climate variability is increasing these risks, making countries and their communities more vulnerable to disasters. To meet these challenges, the World Bank and the Global Facility for Disaster Reduction and Recovery, GFDRR, in partnership with the European Union through the Caribbean Regional Resilience Building Facility, worked with Caribbean countries to strengthen their long-term disaster resilience and support the most vulnerable. Since its inception, the Caribbean Regional Resilience Building Facility has helped inform over $2 billion from the World Bank for investments that are making the region safer and stronger. To transform the lives of these communities, the program strengthened public infrastructure to better withstand disasters and developed innovative risk insurance and financial tools to allow countries to recover faster and build back better. For example, the facility provided support to initiatives like the $40 million Volcanic Eruption Emergency Project in St. Vincent and the Grenadines. This project enabled cash transfers to 4,000 displaced households after the La Soufrière volcanic eruption.
So when I came back from suffering, every month you used to collect $600. And it come in very useful because all in time I wasn't working. I used to pay my bills to them and make a little shopping.
The program also strengthened the country's long-term emergency preparedness and response and is improving the resilience of its critical infrastructure. In St. Lucia, technical assistance has been instrumental in building infrastructure resilience and incorporating disaster risk mitigation into public works.
It was aimed at creating capacity for St. Lucia to cope with natural hazards, better tools, better data, better capacity through training, and also improving the infrastructure in St. Lucia that will be more likely to withstand the sort of hazards that we experience.
Funding has enhanced the durability of key structures built under the Disaster Vulnerability Reduction Project, including roads, bridges, and storm-resilient community centers, ensuring that public infrastructure meets disaster and climate resilience standards. In the Dominican Republic, progress was closely aligned with the country's first national affordable housing program, incorporating climate resilience concerns, enhancing local implementation capacity, and promoting dialogue between different actors in the housing sector. As a result, the facility has helped improve risk-informed policy design. The facility has also supported countries in the Caribbean in advancing the disaster risk financing agenda. This has been combined with efforts to mainstream core disaster risk financing principles throughout the region, including support to the Caribbean Catastrophe Risk Insurance Facility, CRIF, but also to academia through partnership with the University of the West Indies. As the Caribbean facility comes to a close, there is still much more to be done to reduce the impact of natural hazards in the region. The European Union, the World Bank, and GFDRR are strengthening their partnership through the EU Resilient Caribbean Program, Eureka. This new program will see deeper cooperation on the ground between the EU, the World Bank, and other regional institutions such as the Caribbean Disaster Management Agency and the Caribbean Development Bank. Together, Eureka will build resilience with a three-pronged approach. One, through a combination of technical assistance and financing to mainstream resilience into sectoral policies, strategies, and investments. Two, via technical and financial support to improve emergency preparedness and response. Three, by enhancing the use of disaster risk financing instruments and strategies to strengthen financial protections. Together, we can build long-term resilience to support the most vulnerable and help the Caribbean to adapt and thrive.